Hello, financial fans. I'm wearing the red shirt for representing all the red ink that was spilled on Wall Street today. My holdings were down 1.11% for the day, and the S&P 500 was down 0.71%, so the S&P 500 was down less than my holdings were. Did not lose any money. I did not sell anything. And the year so far, my holdings are down 3.4% in my portfolio, and the S&P 500 down 1.45, so they're down less than half as much as I am so far for the year. But I think I'm buying some bargains, and hopefully all works out quite well before the year is over. So this is early in the year, and probably by Monday we'll know what's going on with Russia and Ukraine. Hopefully something good happens, but it looks like there will be some sort of war, and I guess it's already started more or less, but it hasn't been declared or announced in the news or anything yet. But that causes things to happen, and there are other things in the works. We could have 4 interest rate increases this year, or we could have 7, or anything in between. And if, for example, there were 5 interest rate increases and then the Fed says, I'm through raising interest rates, then the stock market would rally big time. But if they go ahead and do all 7, then we'll have an interesting year. So with all that in mind, there are stocks to consider, and if you're a long-term investor, someone who holds the stocks and hangs on to them and gets some dividends, those stocks that do pay dividends. 3 of the stocks I'll mention right now have high dividends, and 1 has no dividend, but it looks like a bargain price at this time. Let us begin the stocks to consider with Energy Transfer, symbol ET. The $10 and a nickel was the closing price on Wall Street today, and 2/3 of the way down the column on the left, 52-week range. We see it has been as low as $6.82 and as high as $11.55, so it's got some headroom, and it could be moving upward if energy value stocks do go up. And the average volume in that column on the left near the bottom, 22,664,000 shares trade every day. And at the bottom of that column on the left, we see the word undervalued. The experts think this stock will be going higher in price. Now in the column in the middle, the second item down, the beta of the stock. This stock will move about twice as much in the same direction as the market. So if the market's going down, this one will go down twice as much percentage-wise, supposedly. That's beta is a loose term, but it is something to think about. If you thought about everything else, the beta is meaningful if the market should go up, or even the energy sector should go up. This ET stock could go up twice as much. PE ratio, third item down the middle column, 5.32. That is very good. And the earnings per share, $1.89. That is quite good. And the forward dividend and yield, we see toward the bottom of that middle column, forward dividend and yield, 6.85%. That's a lot of checks coming in with good money while you're waiting to sell the stock at a profit, hopefully sometime in the future. The 1-year target near the bottom of that middle column, $14.32, so that would be a nice move upward if that should happen. Looking at the next stock on our stocks to consider list, ETRN, Equitrans Midstream Corporation. It closed at $7.16, low price stock here. And in the column on the left, 2/3 of the way down, 52-week range, $6.81 to $11.52. So it was much higher, but it's away from the lows enough to look like maybe it's going to struggle back up to some higher numbers soon. The average volume, 5,447,000 shares trade every day, and this stock is considered by the experts to be undervalued. The beta, again, 2, this will move twice as much price-wise, percentage-wise, as the stock market in general. The PE ratio, third item down the middle column, 11.44. That is not too bad at all. And the forward dividend and yield, 7.84%. And the 1-year target, $10.79. It would still be a low price stock, but it would certainly be quite a bit higher than the current $7.16. So this would be a big move upward if they have got their numbers guessed right. Alphabet, this is Google, G-O-O-G is the symbol. $2,609.35 per share, so it is an expensive stock per share. And this is a stock that is well known, very big company, and they can make a lot of money in a short period of time. We see in the 52-week range, 2/3 of the way down, the column on the left, $2,002.02 was the low. $3,042 was the high. That was quite a bit higher than what it is now. Average volume, even at that price, they're trading more than 1 million shares, almost 1.5 million shares every day. And the experts consider this stock to be undervalued. This is Google, considered to be undervalued by those who study the numbers. The PE ratio, third item down the middle column, 23.27, which is not bad. It's not outrageous for a company as huge as Google and as successful as Google, or Alphabet, I guess I should say. The 1-year target near the bottom of that middle column, $3,506 per share, and that would be a big move upwards. And of course, it does not have a dividend, and of course, there's no dividend yield. We move on to the next stock, and we see that it is PBR, and that's a stock that I do own. $14.01 is the closing price today, and it was up a tiny bit today. On a down day, it was up. 52-week range, 2/3 of the way down. The column on the left, $7.06 was the low, and 14.05 was the high, so it's right at its high, almost within 4 cents anyway. And the average volume, 31 million shares trade every day. This is considered to be undervalued. And as I say, I do own this stock. The PE ratio, third item down, middle column, 3.5. That is incredibly low, which is good for a PE ratio. The forward dividend and yield, 14.61%. You can see why I have bought this and am holding on to it and hoping something good happens. The 1-year target estimate, $14.27, barely a move at all. But if the dividend keeps coming in while one holds on to this stock, that would be quite nice. And with that, I will say thank you very much for watching.